Hello, this is Adrienne Green, Realtor with Sampson Properties, and I wanted to take a few minutes today to speak to you about the considerations when you go to buy a non-local investment property. We're in a new year and it is chilly, right? We're in January and you may be dreaming of having that beach house down in Florida and having it as an investment property. So then you could just jet down there and expense the whole trip, right? So I just wanted to kind of talk about, as somebody who owns a non-local investment property, what some considerations are that you should have so that you make an informed decision whether or not you're going to get that wonderful sunny beach house. All right. So I wanted to talk about three positives that people tend to note. First, that real estate can be less expensive in other areas. All right. When we're comparing it to Northern Virginia, you might be able to get a house for much lower initial investment than you could in Northern Virginia. Second, like I kind of mentioned in the introduction there, maybe you're looking forward the opportunity to write off your trips to this place. And third, maybe you want to diversify your investments. You might think you're in a better financial position if you already have real estate here in Northern Virginia to have real estate elsewhere as well. Okay? Those are all valid pros, but there are some other considerations you want to have. All right? With this first pro of it being less expensive, we do want to consider the strength of that real estate market overall. Are the houses there cheaper because if there's a recession at all, the rents are going to bottom out and the housing prices are going to shrink by 50%? I'm not saying that as a scare tactic. I'm just saying we want to look at those underlying fundamentals of that real estate market to make sure that you still have options and you still have a good financial investment, even if the economy as a whole is hit. Second, the issue with writing off your trips there. It can be fabulous, but you want to make sure that you're committing to vacationing. Well, not even vacationing. You're going there to work and take care of this house. Okay? You need to be spending at least 50% of your time there on working on this house in order to write off that trip. Okay? And honestly, if you have an investment property and it's non-local, you will be spending over 50% of your time there working on this house, okay? As someone who has a house like that, when we go down, we spend the time fixing things up, making some minor repairs, buying new things for the house, checking in with the cleaner, maybe getting the HVAC serviced. There's a lot of stuff that you have to fit into your house maintenance to the few weeks a year that you're down there. So yes, you can write off that trip, but you will be spending at least 50% of your time down there working. So that has to be something that you are committing to, and you're committing to going there, I would say, at least twice a year to make sure that that house is staying in good shape. All right. And then third, diversifying your investments. Yes, it is more diversified than having all of your investment properties in one area, but we want to make sure we're diversifying with something that's strong. Again, how are those real estate fundamentals? And how do the returns compare to Northern Virginia? All right. It might be different, but is it as good or better in terms of the percentage return that you're getting on that investment? All right. Now, I do have a few different cons that you want to consider as well compared to having a local investment property. The first is those travel costs. Yes, you will be able to expense travel you take down to that location for taking care of the house, but that is a higher expense. Are you still going to be profitable? Is it still going to be worth your time and your investment? Or is there a different alternative elsewhere that's going to make you more money? All right. Another thing is that your maintenance costs could be higher in this location. All right. And that's because you will not be boots on the ground to do any of this stuff yourself. So management kind of going hand in hand with those maintenance costs, we could have higher management and maintenance costs. I will note that some home services, such as maybe getting a plumber or an HVAC technician out there, pest control, those could be cheaper in these other areas, but will that outweigh the other management costs that you're going to have to pay people to do everything and you can't do any of it yourself? So those were the big things that I just wanted to talk about today that you want to consider when you're looking at a non-local investment property, when you're looking to get that beachfront, beautiful, warm house this time of year. All right. The pros can be less expensive real estate, the opportunity to write off or expense trips to that house or that locale, and that you're diversifying your real estate investments out of one region. But the cons are your increased expenses with the travel costs down there, the maintenance costs since you're not local, and the management costs since, again, you're not local. So purely from an idea of financial returns here, we're not talking about time or anything like that. We're just talking about the financial analysis, you want to make sure you're taking all those things into consideration. All right. Like I said, I own a non-local investment property, so if you want to talk to me about my experience anymore, just reach out. I'd be happy to help. Thanks so much for your time. Adrienne Green, Realtor with Sampson Properties.